Hello? Is my screen quality a little bit better today than last time? 6163 kbps. Alright, cool. Yeah, I'm just using my laptop monitor today instead of my ultra wide, so it should be a little bit better. Give some time for people to trickle in. Alright, I'll kick it off in like 4 minutes, let some people join in. Alright, so I'm gonna go ahead and kick it off in 10 minutes, but before I start, if anybody has any questions, like I know a lot of people try to use the um, tool throughout the day. If you had any questions or if you had anything that confused you, just go ahead and drop it in the chat so I can go ahead and go through them one by one. I'll probably just do a recap of the day first from my perspective, and then I'll go ahead and answer anything and go over individual stuff that you guys are asking afterwards. Access to the tool was in the free Discord that everybody should be in. I dropped like a lot of free links, so most people got in already. I even asked last night if anybody needed access, and you just had to send me a DM, and I was giving out free links. Can't do captions on YouTube Live. That's unfortunate. Let me see. Yep. I mean, the tool is off right now. It was on throughout the day. Were you able to see it throughout the day? If you, what's your Discord nick in the server? Like, what's your name or your username? It should have been under confidential category, and you probably don't have access now, but I opened it up yesterday night. Lifeline 614. Let me just double check something. Yeah, says you should have had access. Yeah, I opened it up yesterday. I just shut it down after the market closed because it was only supposed to be open for a single trading day. Well, haven't decided I'm gonna open it up tomorrow. We'll see. We'll see, because a lot of people keep on telling me to open it back up, but nobody really tunes in, or at least the ones that keep on telling me to open it up don't tune in. So I end up having to answer a shit ton of questions throughout the trading day, which I don't like doing because I need the trade too. So yeah, I'll have to decide. All right, I'm gonna go ahead and kick it off. If anybody misses it, they can go ahead and watch the recording. Let me just go through and show things here. Hold on, I'm trying to just get my heat map to the point where it was at the start of the day so I could just go ahead and do a play-by-play walkthrough of everything. Just give me like a minute or two. Yeah, Big T, I think you're right. I think what I'm gonna do is I'm gonna go ahead and track who is actually tuning into the stream, and I'll probably just go ahead and open it up for selective access, like user by user, because there's only like 30 something people in here anyways, and I think most of you guys already have access to the paid version or the paid server. So anybody else that's chilling about here, that's not in the Asgard server, maybe I'll just go ahead and give you access tomorrow. Yeah, today was a fucking nightmare though, man. Like, everybody was asking dumb questions that they could have just found out the answers to if they watched all of the live streams and all of the videos. So, like, I don't like it when people waste my time, and like when people waste my time, it literally impacts my trading too. Because like I'm trying to trade like 0 day expirations, that shit moves quick, but then like I feel obligated to respond back to the dumb questions, and then like I just get distracted too. Yeah, exactly. And then they bitch and whine when they lose money. I'm like, well, no fucking wonder you lost money. Like, you're literally inversing and fading everything that I said to do. Yeah, I just gotta be better at Dylan, go to sleep, man. All right. Okay. You guys all see the Discord channel now? This is where I was piping all of the heat map updates. It's in this confidential tab. Currently, it's not open to everybody, but earlier in the morning it was. Um, I'm on Eastern time, so when you look at the timestamps, just know that we're looking at Eastern time. East Coast is the best coast for trading. Um, like right off the bat, the first thing that I need to mention is that in the morning I mentioned that the nodes for June 6th were extremely dominant. The reason that they were dominant is because on June 6th we have non-farm payrolls, which is a red envelope economic data event, and that's generally a market mover. So already it's only Monday, but leading into Friday, like you're seeing like, positioning already happening. And since these nodes are like ultra bright, the ones here in the first column for the 0 day expiration, they're not as obvious, which is options exchange is in Chicago, SIBO is in Chicago, yeah. Yeah, isn't Chicago on the East Coast? Isn't that East Coast time? Or is that like 2 hours difference from West Coast? Okay, well, close enough. Yeah, it's close enough. Um, Yeah, but anyways, what I was mentioning is that since the Friday ones are lit up like pretty yellow, like Mountain Dew piss color, the ones on the 0 day expiration, like they're not as obvious because like this Friday is dominating the color scale, which you see on the top right over here. That's generally how the heat maps work. So the right way to look at the heat map for the 0-day expiration was to pretty much just look at the numbers. Like you have to look at the numbers. Generally, like these bright blue ones are the positive numbers, and then the dark purple ones are the negative ones. Also annotated and prefixed with a minus sign. Okay, so right off the bat, when the window, like the market opened, I think we were at like 5,900. And then at 5,900, like the highest node was at 5,915 and 5,920. So we knew that as long as 5,900 held, which is like a pretty decent, support level, we would just grind up a little bit, okay? So, we started at 5,900 and, sure enough, what you see is that the market starts gravitating towards what the top nodes and the magnets are, which is at 5,915 and 5,920. Now, the reason I pretty much mentioned like you don't want to trade in the first 15 to 30 minutes is because that's when, big money and dealers are very active. So you're going to see a lot of shuffling. Like unless you're really, really fast with like scalping in and out, it's difficult to, hit these trades. Because I don't really know people's experience level. Like some people, might be swing traders, some people might be day traders, some people might be scalpers. I'll generally always err on the side of caution and try to speak for the majority. If you're quick and you're good at scalping and like you could just catch these moves and be in and out, like more power to you. Like you actually could trade these moves in the first 30 minutes and you'll probably turn a profit. But yeah, we pumped up to like 5907.70. What I was mentioning though is that this 5,900 is like growing like earlier and now like it's almost at 5,000 now, right? Which actually started dominating and surpassing this 4.7 node right here. So that's how I knew, and I mentioned that any pumps that we see are gonna start fading down, okay? And that is exactly what happened. Like you see 5,900 here now, which is still the king node, and shortly afterwards, what you'll notice here that you don't see up here is that these downside nodes right here, like they start to accumulate, like the 5850, the 5840, like even this 5865 and 5880. Like you see all of these start to accumulate. So one thing that I mentioned about these like supposedly yellow nodes, like these would be yellow if this 5950 and 5925 on Friday wasn't on the map. Like that's what you have to understand. If we lose 5,900, like that yellow node becomes a ceiling, which will effectively start to deflect price. So if we drop back down below and then price bounces back up to 5,900, then you can expect that to become a ceiling and resistance. And like I don't quite remember how the day played out, but like I'm just mainly scrolling down the map. Okay, so right here you see it fall through 5,900. You're at 5897 now. 5,900 is continuously growing, like it's at like 6,000 now. So you know that's gonna have a little bit of resistance because the positive nodes are supposed to deflect price, and that's kind of their characteristic. And you mainly see us hovering around, like we keep on dropping. And again, like these nodes are getting brighter and brighter, like down to 5850 and 5820. Like I referenced them earlier for a reason. It's mainly to show that you can actually see the positive accumulation of the nodes down here. But the one thing you need to remember is, yes, the positive nodes are attractors of price. The negative ones are the ones that become the floors, okay? Like negative nodes generally become price floors and support. And as we're growing down, like what you'll see is like off here, like if we lose 5895, the next floor is at 5880. And the next floor after that is 5865. Like you generally don't have any more like put floor, like you don't have any more like Gex floors below that. So what I mentioned in the chat earlier is like, okay, if we lose 5880, 5865 is the second support level that's beneath it, right? So you can keep on scrolling down. And like, okay, right here is when we kind of tap down into 5865. And generally, when you're tapping down into the Gex floors where you're expecting price to bounce, that's where you want to start taking profits if you're in puts, okay? Like just because these brighter nodes are down here doesn't guarantee that we're going to break down below the floor and tag these targets. The reason being that 5,900 hasn't really let off. Like earlier, this is at like 5K. Like despite the spot price dropping 35 points, like this level is still remaining strong. The 59.20 is still remaining relatively strong. So generally, based off of like price action, if we're slamming into a support, you can expect somewhat of a bounce, okay? So, I think we did a little blip below it here, like below the 58.80 and the 58.65, the negative node. But this is the point at which you could look at the map and say, okay, like we're hitting the second negative support, the GEX support at 58.65. I'm still seeing the brightest yellow node in the 0-day column up at 5,900. So therefore, there's a likelihood that price is going to gravitate back upwards. Like sure, you've got like 3,600, you've got 4,200, you've got 4,251 here. But first thing first, like we just dropped 35 points. And generally, like the market doesn't ever really go straight down unless we're crashing. So you can expect some kind of relief bounce. And on top of that, the 4,900 is still a strong upside magnet. So the risk to reward here is not to like expect this floor to break and then chase puts to these nodes. It's to play a reversal to the upside. And like you've just got to trust that the 5,900 is going to have some pull. Okay. And then look, like a lot of people probably play the breakdown, like they're like, oh shit, it's breaking down below 58.65, like I'm gonna short that. But remember, like if you read over and watched the previous videos, the purple nodes are like pouring gasoline on a fire. Like it pretty much amplifies a move. And what that generally what it generally results in is a lot of liquidity hunts. So even though it dropped like partially below 58.65, like there's a likelihood that it just reclaims it and starts to bounce back up. And it literally happens in 15 seconds. Like these heat maps print in 15-second intervals, like 1-5. So within 15 seconds, like we bounced like, 2.5 points. We reclaim 58.64 here and 58.65, and like another 5-point bounce within like that 15-second range. So you can see how aggressive these bounces are, like at that second negative zone. And it's happening because that 5,900 never truly died down, okay? So that's pretty much like your lowest dip of the day. Like if you cut it off of that second negative node, like you pretty much sniped the bottom and like you would have never had to like exit the trade if you're in calls. I think what happened with a lot of the newbie traders is that like they caught the dip, but then they don't know when to sell. So like they make like 5% or they make like 15% and then they just take profits. But most important thing that you have to understand after you enter is like, all right, let's assume 58.65 does bounce, right? Where is the next upside price target where price is likely to start slowing down? It's not at 58.70, there's nothing there. It's not at 58.75, there's also nothing there. 58.80 is your first price target. And then if they flip that into becoming a higher floor, then 5,900 is your next price target. After that, you've got 59.10, you've got 59.20, okay? Like this is your plan. Like don't just enter because you're entering a put floor. Like immediately your mind has to flip into understanding, okay, if I caught an optimal entry, like where is my take profit level going to be? And like where is my stop loss going to be, right? So the first thing I'm thinking is, okay, I caught a bounce at 58.65, but 5800 is like bright, like sure. Like if we fall down, like it's going to hurt. So where would your stop loss be? Your stop loss would be after you catch the bounce. If we break below this put floor, like you should be stopping out, okay? But if we bounce here, you're looking for 58.80, you're looking for 5,900. And then let's see what happens here. All right, 58.74. Remember our stop loss is at 58.65. So like if we see this price drop back down there, like you'd be stopped out. But in this scenario, like from what I remember, like you had no reason to stop out. Like you caught the lows and we wrote it up like what 15 points initially. You start taking profits into that first 58.80, but you have confidence that we're gonna go higher because this node grew to 7 million, which is the highest on the map, and you see continuous upside accumulation here. Also, one thing that helps that's not as strong is that the brightest nodes on the map in its entirety is at 59.25 and 59.40 or 59.50. Like it doesn't impact 0-day price as much, but if you're looking at the map and the largest nodes are on a Friday, like that can still have some level of pull. Like that's important to understand. Okay, so 58.81, like that means we claimed this put floor and like this becomes the new support. Like now the way you're trading is, if it drops below 58.80 or 58.75, you stop out. But otherwise, you just ride this bitch up. You ride it all the way up to 5900, and then you see how these upside nodes continue to accumulate, and that helps you determine, if you want to hold more or if you want to start, trimming out. Okay? So, yep. You just see it hover around that node, which means like, if you took partials there, like you're looking good because, no matter what, even if you do trailing stops on the rest, like you're still in profit. And I think it just hovered around that point for a bit, and then ultimately like that 5900 just completely overpowers, and then we pretty much start to just ramp up. Like now we're at 58.92, and like you look at this 5900 node, like we're at like 10 mil now. Then it just keeps on going up. So this is like not hindsight stuff. Like we're actually looking into the future of how price is going to move, which is why I consider it to be very impactful of a tool. Even at this point, like you've got 5911 mil, but look what's happening now. Like you've got an accumulation of 5920, you've got 5930 accumulating, 5905 is accumulating. Look what happened to these downside nodes earlier that were all at like 3 to 5 mil. They've pretty much reduced in size and like they're barely noticeable. So at this point, like shorts are not even in the picture. Like there's not enough downside pull for me to consider like trading a 5900 rejection to the downside. Like the only thing I'm looking at is, okay, like this means if 5900 clears, like we're probably going to have, more decent upside to see at 5920 and 5930. Like if you traded throughout the day, like you remember like towards the end of the day, like we squoze up to like 5935 or something. The thing is, like, this map is literally telling you that it's gonna go up, you know? Like it's not by accident, like it's not by like, just doing hindsight trading. Like these nodes were not even here earlier. They were at like, minus 1 mil if anything, but like it went up in size tremendously. So you can essentially expect like the bulls to remain really strong. Like Powell or not, like, people say like, oh, Jay Powell's going to be on today or like he might resign today. Like it doesn't really matter. Like dealer positioning is pretty much everything in this market, especially with 0 day expirations. AI Master, why the fuck you lost a lot of money on puts, dude? Are you eggplant? Eggplant puts? Eggplant puts always fades Heatseeker. I tell him not to. But yeah, that's how like it's literally simple. Like today was a pretty like it was a simple day to trade with the Heatseeker. So like when people say they lost money, like I don't quite understand it because there weren't that many tricks that they played on us today. Like one thing that I did mention though is that we're gonna see a lot of chop. And the reason I said that we're gonna see a lot of chop is because this 5900 is the biggest node, and there wasn't really another like massive node upside that can hold a candle to it. Like maybe 5920 at this point is like somewhat of a strong candle because that's like, it's like 6 mil as opposed to 10. So it's almost got an equal force. But, it took time for that to accumulate. So, now we continue to see this accumulate up here and we're like, okay, like maybe we could see some upside pull now if 5900 clears. But like the most important thing is like you need to be able to track the delta of change within each of these nodes to see where dealers are stacking on versus stacking off. Like even until this point, like now we start to see like a little bit of 58.70 here, so I'm like, okay, like maybe we're gonna pull back a little bit, but like you're still in buy the dip mode because like these nodes down here to the downside never really came into the picture. Like these are gone and they've been gone. Like these upper nodes are a lot stronger. Yeah, 5900 was extremely strong. So like, if you are following the chat and you're following my live analysis, one thing I said is that the dips are going to get bought and any pumps above 5900 are going to fade back to 5900, okay? Which is why I told everybody like it's a scalping day. Like when you have a single king node like this, when you dip below, even if it dips below slightly, price is going to snap back up. If you go back up above 5900, even if it's like 10 points or 15 points above, it's going to snap back to 5900 because this magnet remains the strongest on the day. Okay, and like that's pretty much how things played out. Like we get a pump to 5900 here, and like if I remember correctly, like this is when the 5935 started to accumulate. Like where did the price close today? It closed at 5935. This is at 7 mil right now, which is like approaching very close to that 5900. So the pull is getting stronger and stronger. And like here, let me keep a tab on this. Like 5935, 6955. Like let's look at what this was just a while ago. like nothing. It was at like 1.5 mil, right? So like this is very easy to see. Like if you look at the delta and the rate of change on these nodes, like that literally gives you insights with regards to how dealers are gonna pretty much move price, and you get advanced insights into how they're gonna like whip things around before anybody else does. And like that's the best way to trade. Like you don't have to react to price, you don't have to chase price, you don't have to like play EMEA crosses. Like you literally know where they're gonna be, so you just meet them there. Okay? So like even here, like 58.94, like it's dipping down, but you know, it's like 5900 never lets off. So you buy that dip. And then you buy the dip and it goes back up to 5900. Like I can't tell you the number of times like it bounced off of 5900 and then at the end of the day like it literally ended at 5935, and like that shouldn't be a surprise to us because the rate of change with that 5935 node was pretty insane. And like let me just show you, like everybody has a good decent visualization in their head with regards to how the heat map looked throughout the day. So I'll just open up my trading view here. Like this is the SPX 3-minute chart, which is what I generally trade. Like towards the second half of the day, like we had our nodes at 5900. Like 5905 was the largest negative node, and then 5900 was the largest positive node. So effectively, all you really need to do is draw a zone here, like, and like you actually understand why this zone is important, right? Like not just because Heatseeker says it is, but like you've got a resistance here, you had a resistance here, you had a resistance here. Even basic laws of price action, like literally all you need is this. Like once it breaks above, you expect that to hold as support. And not only is it using a resistance to support flip, if you looked at Heatseeker, like 5905 was the floor and 5900 was the next floor down. So like we would just buy these dips. And as long as you did that, if you bought the dip here, you made money, bought the dip here, made money, bought the dip here, made money. Like these are all money making opportunities. The one thing that I think people struggle with, and the area where they kind of have to shift their mentality, is that you can't be afraid to buy the dip and you can't be afraid to short the rip. Okay? Like the reason why people as novice traders are losing money is because they play like these, you know, EMEA crossovers, or they chase the momentum. So instead of entering at the lows here, what they do is they see the bounce and they're like, okay, it's bouncing off of support, and then they're gonna look at what they're gonna do here. Like they see it's breaking above and then they're gonna buy it. And what happens? It slightly breaks above, it comes back down. And like when it comes down this much even, like you're already down like 30% or 40%. So like you're shitting bricks and like you're either gonna get stopped out, or even if it bounces up at this point, since you're already in the red 30 to 40%, like you're pretty much battling against theta at this point. Like this is gonna eat away at your contracts. So if you know the upside target is going towards 59.35 and you see price dipping into that 5900 to 5905 zone, why should you and why are you afraid to buy the dip? Like, why would you chase it after it bounces? Like, you want to buy that shit as it goes down. Like, these red candles that look very bearish, like, that's not bearish. Like, that's a buying opportunity for us, right? Like, you buy these. Like, you don't buy into green candles. Like, that's the biggest thing that people make a mistake on, is like, if you get into the habit of buying calls on green candles and buying puts on red candles, and on the flip side, you sell your call options and take profits on red candles, and you sell your put options and take profits on green candles, you are losing money on both sides of the trade. Like that's actually what 90% of traders do. Like, you know, they stop out because they see, like during calls, they see a couple red candles and they stop out, right? Like you easily lose because of slippage, but your premiums also tank because like why would people want to buy calls when the price is going down, right? So the smart thing to do is if you're catching this bounce, and if we're saying like, oh, 59.15 or 59.20 is going to be a target, like let's say 59.15, like as the price is going up right here and you see these green candles, like you should already be setting a limit sell so that you can get filled on the upswings. Like what happens is like people see this, they're like, oh, it's going to break past 59.15, and then it rejects, and then that's when they sell their calls. At that point, like your calls probably went from like 50% down to like 15%. And like you've lost a shit ton of money, okay? So just remember that. Like the cool thing about Heatseeker and like the reason I like it so much is that it gives you an advanced like projection of where price is gonna head. So if it says price is gonna go up, but you're seeing a retracement into a like resistance turned support zone, like you should have the full confidence to buy the dip there, okay? That's the best risks to reward setup. And then go back to the Discord. Um, yeah, I think most people remember how it played out, but like, and the shit was a wrap. Like the 59.35 started to accumulate, and like you see these nodes are like massively bright, but like this shouldn't surprise you. Like you started to see this accumulate already, even when price was at like 5,900. Okay, so yeah, that pretty much sums up the day. Like I told people to start taking profits at like 59.25 because that was the largest node, and there's a likelihood that that could potentially reject. But also, even if price broke back above 59.25, like since it's the strongest node, like it won't be able to go above like 59.30 and 59.35 unless you saw more stronger upside accumulation at like 59.60 and 59.55 with this 59.25 letting off the gas. Like you would want to see this go down and dim and then these nodes growing. But the fact that it didn't is pretty much proof and confirmation that we're going to top out at 59.35 at the highest and just see where we topped out. I think we ended the day at like 59.36, like pretty damn close, okay? So yeah, that pretty much sums up the day. Like I consider this like a B setup. Like, you know, I pretty much grade like the heat maps and I usually tell people like, yeah, this is an A plus heat map, this is a B heat map, or this is a D heat map, indicating like don't trade at all. Um, like today was a B heat map, and the only reason I consider it a B heat map is because for the majority of the duration of the day, like the 5900 was really strong, and we didn't get much action beyond that. So like we chopped around for a pretty long time. Usually, and in a lot of scenarios, like you get a much larger range where like you see 5900 and then above that, like you've got a massive yellow node at like 5960. Like those are the days that you can easily bang out like 500 to 1000% trades. The only thing is that they don't happen often. So when you look at the map and you're like, okay, we've got a pretty tight range between, you know, 5900 to 5925. Like it's only a 25 point range, right? Like you have to get ready to take profits at like, you know, 50% or 100%. Like you'd be lucky to get like 200 to 300%, okay? So depending on the map determines like how long you hold something or like, you know, how much, yeah, pretty much like depending on what the map is saying, like you'll determine how long you want to hold versus like, you know, taking profits faster. Okay, let me answer some questions. John Rodriguez says, what does the yellow nodes on Friday mean to you? Um, it pretty much means that we're gonna have a big event on that day. Like if I look at it, I mean, I don't know how it's gonna look tomorrow. Like we can go ahead and take a look at it, but I mean, even on the VEX, which is meant for swings, like we're seeing a range between 59.50 and 59.25. But this changes. Like this is gonna change tomorrow. Like we're not gonna know how it looks. It looks like going into Wednesday, like it wants to try to tag, you know, 6010. So we'll have to keep an eye on things. Like they're always like moving targets, and they always get up to date depending on how dealers position through the night. Like again, like the most important thing that people have to realize and understand is like you don't want to try to predict the move on Friday. Like you just want to play and trade what's in front of you because the market is not predetermining where the price is going to end up on Friday. Like dealers are literally repositioning and trading like every second, you know? It's like the area where a lot of traders kind of fuck up is that like once they stick to a bias, like they marry it and they're like, "Oh yeah, I'm bullish for like the next 2 weeks." And like, you know, they're going to remain bullish for the next 2 weeks. But why do that when like dealers are repositioning and like they're changing their mind every second? Like we should be doing the same thing. Like the reason why people are not making money is because they're stubborn and they think that we're living in the past where like price targets are predetermined like a full week in advance. Like it's not like that anymore because options trade every single day. Okay, AI Master, I still don't know who you are. Let me know what your name is on Discord. Yeah, if you're not bothering me, what time is good to buy SPX in the morning? I mentioned this a couple times, but generally just wait the first 15 to 30 minutes out, especially if you're a noob. Like if you're a good trader, like you could try to catch the moves out of the gate, but you know, I think 99% of you guys are not like professional or really, really good traders. No offense, but like you want to trade when the conditions are ripe and in your favor. Like you don't want to play on hard mode. Yeah, volatility, scalp action all morning. Yeah, that's correct. I think like we are in a scalping market. Like there's no momentum to either side. Like we're just ranging, we're just chopping. If you look at the chart, like it pretty much says it. Like you can look at, like let me just open up my trading view real quick. Yeah, like the price is just so extended. Like after we did this entire move up, like you need time for consolidation. So you've just been consolidating in this range. But one thing that might happen is that you know I think we are forming like some level of trend here. Like we have a real opportunity for price to break above this, and like if that shit happens, like we are going to see fireworks. Like that is not something you're gonna want to miss because we've been consolidating since May 19th. So let me see how that looks on a different chart. Yeah, probably looks similar. Like it already tried to break out once, but it was a fake out candle. Like it's highly likely that the second time it tries, like that's gonna break out. Like the NQ. Yeah, it's still trying. It's trying, but like this is a nasty liquidity hunt and it dumped pretty hard, so let's see. Yeah, power hour was insane. Like the 59.25 was like really, really strong, and at that point, the 5900 had kind of faded. So even if it dipped below 59.25, like you should have been looking at calls. If it went above 59.25, like 59.35 is the ceiling. So you actually had multiple opportunities to short like the 59.35, and you could have made decent cash as well. I actually did, and I remember my trades went like 50 to 70%. So yeah, there's good money to be made. Like you just have to be ready to pull the trigger, and you have to be quick. Yeah, Terrian major area of value. Not really sure what that means, but can you just clarify what you mean by that, or what the question you're asking is? Yeah, Abraham. Yeah, indeed. Today the map was talking to you that is going up. Like it was incredibly clear. Like one thing I say is like I can't trade without it anymore because like the moves become so obvious if you keep on looking at it and training yourself to follow it. Like I can literally trade with just the heat map alone. Like it's easy. Have I been swinging anything? No, I haven't been swinging anything lately. Like I don't really feel comfortable swinging this, especially with a lot of uncertainty. So the price is generally extended. Like I don't swing often. I only swing if I'm confident that I can snipe the top and see like a massive downswing. Or if I could swing like the lows from here. Like I swung the lows from here and I wrote it up, which is why like I don't really see a good risk to reward opportunity here anymore. Um, but I'm primarily a day trader. Like I prefer to day trade. It's just a lot easier and like you get your money up front and faster. So it's just easier for me. When you buy SPX contracts, normally buy $1 to $3, which means it will be out the money. Yes, that's correct. I generally trade out the money, especially if I'm trading with other people, because like when I'm actually trading my main portfolio, which is like above six figures, I usually take like 50K to 100K positions. So I don't do out the money there. Like I'll generally trade like at the money or in the money. Otherwise, like I get raped on commissions, and also I can get destroyed in terms of like not being able to get out of a trade. Like if I have like $50,000 worth of like an out the money contract, like sometimes I need to buy like 600 to 800 contracts. And to get out of all of those with a good fill becomes difficult, but it becomes a lot easier if your contract is like $10 each or like $20 each because then like you can buy 50K worth with just like, I think that's what 20 contracts or something. Yeah, 20 or 200, I can't do math right now. But yeah, it's mainly a liquidity issue. Like once you start trading a big port, foul 925. How close to in the money are you choosing your strike? Again, like honestly, it doesn't really matter that much. Like if you're right, like it doesn't matter if it's in the money, out the money, or out the money. Like you're gonna make money. The only thing you need to know about out the money contracts is that for those, you are dependent on the gamma Greek to multiply delta so that your contract sees exponential returns. It's just like gamma is its second derivative Greek, so like it requires a little bit more of an impulsive move in price for it to actually have a good impact on like your premiums. So like, you might have heard of like stuff like gamma squeezes and Venice squeezes and stuff like that, but if you're trading out the money contract, like your timing for your entry has to be good, but you also have to look for a big move. Like just a small like 2 point or 3 point move won't give you anything. Whereas if you trade it in the money or at the money contract, even if SPX moves 2 or 3 points, like you're actually still making like 10% or 20% on the contract. Do I ever hold a bullish or bearish bias going into the day? Not really. Like my bias is really determined by Heatseeker. Like I let that talk to me in the morning to tell me like where price is gonna go. Like it's great because like I don't have to worry about having a bias because I literally look at it and it tells me like are we going up or are we going down? Like the dumbest question that a lot of people ask me, and like this is no offense to anybody, but it is like are you bullish or bearish? And like I don't like frankly I don't think it matters. Like I can make money on puts in a bull trend, I can make money on calls in a bear trend. Like that's the great thing about day trading is that it's not as influenced and impacted by higher time frame trends. How would I have played the last 5 minutes of today? I would have played like the 59.25 bounce multiple times if it ever came. Let me actually see. So towards the end of the day, if you look here, we had a major node at 59.25, like that's down here, and then the next one up was 59.35. So like I'm mainly looking to long the dips here, and I'm looking to short the rips here. So the way I actually traded it, and it's kind of funny because like I missed this trade at the end because of it, but I shorted the 59.35 here because that was the brightest next node up. And if you look at the heat map at this exact point in time, what you would have noticed is that sure 59.35 was brightly lit, but 59.25 was still the king and it was the dominant node. So what I did was I shorted it at 59.35 and then I told people to trim as it dipped down into 59.30. Like I didn't wait for like 59.25, and the only reason I didn't is because even as it was dipping, the 59.35 still had decent pull, which means that you generally want to trade it and take profits at the 50% point, which is 59.31. And that's still printed like 70 to 100%, like even if it's just 3 to 4 points. General rule of thumb is yes, trade delta that's greater than zero point 0.3. Quite honestly, like I violate and break that rule a lot, and I know a lot of other people do as well. If you want to build a lot of consistency, and if your portfolio is at least 30,000 or 50,000, you will be much happier, and you will see a lot more consistency trading delta that's greater than 0.30. The reason I generally just do like the reason I generally only do why is my trading view moving? Like I'm looking at my YouTube studio and I see my trading view moving. But yeah, the reason I do a lot of out the money and like I do a lot of cheaper contracts is because like it's more affordable and like we have people that are trading $500 ports or we have people trading like $1,000 ports. But if I was not alerting and if I'm not doing analysis for people, and I'm trading on my personal account, most cases I'm trading delta greater than zero point 0.3, and only for super lottos. Like for super lottos where I'm like, yeah, I just want to put like a couple $1,000 into a trade and like I don't care if it goes to zero, but I want to step away. Like at that point, like I might take a $5,000 position of something that's out the money so I could just get a lot more contracts and then like I'll just step away and see if it, gamma squeezes or not. Because then like either I lose $5,000 or like I hit a 1,000% trade and I make 50K. Like the risk to reward for that is good for me. Yeah, I take 50K positions. Only reason I go in the money is because like if I'm taking a position that large, like I'm not really holding it that long. In a lot of scenarios, especially for people that are trading much larger portfolios, a lot of them actually take profits at 20% or 30% because they don't need more than that. Like imagine you're taking a 100K position and you're hitting a 20 or 30% trade. Like that's 20K or 30K profit on the day, and like that is massive. Like like that's all we need on the day. Like we don't need anything more than that. It's just a lot less stressful because like you just take the gains and like you're out and like you're done for the day. Yeah, Chris Portillo, yes, the contracts can 2 to 3x last 5 minutes very easily. How often should you adjust the fib levels? Um, I mean, you adjust fib levels whenever you see a change in the structure. So, not really sure if you use smart money concepts or if you use ICT or if you just use basic price action, but you mainly want to draw a fib when you have a change in trend. So, like, you've got this one right here, that's a bull trend. This is your bear trend. This is your bull trend still. Like, you know, like this becomes a fib. And like if you look at that fib, like it worked because it bounced right off of the 79% to 61.8 and then it kept on going. Like that's where you want to draw them. All right, any other questions? How often do I trade 1 minute versus 3 minute? Like I actually don't trade the 1 minute chart that often. It's just a little bit too much noise for me and it kind of shakes me out a lot. I know some people who have access to my algo trade the 1 minute chart. And if they do, like they did pretty well. Like they went long here, they shorted this, shorted this, shorted this, shorted this, shorted this. Like it has a pretty good hit rate, but it's just too much noise for me. Like it gives me anxiety, and I just prefer to zoom out to the 3 minute chart. Yeah, 3 minutes generally the minimum I use. Yeah, it was really cool to see it in action today. I might open it up for another day tomorrow. Like the only reason I don't open it up for too long is that like people actually have already started paying for it as of 2 weeks ago. But I gotta make it fair for them. Like why would they have to pay for it if I just leave it open for free? Like one thing I did for them though is like I did do a couple of extensions, like 14-day extensions, because I had issues with the tool initially. So usually if I have issues with it or if it's impacted by a bug, I'll generally like give an extension for free just out of goodwill. Yeah, the Tesla Heatseeker is pretty good. Like last week, it predicted 365 on Friday. It predicted 365 by Friday, and like I shared this in the last recording as well. But it actually rejected 363.70, and from there, like it printed the bearish glitch dot, so you would have been able to take a short there, and it dumped 5% within like 2 hours. Like on Friday, this would have been like a 500% plus trade easily. Any technical analysis videos or books you would recommend? Man, I don't really know if I found many good ones, but I mean, I wouldn't go too deep into the rabbit hole when it comes down to actual TA. I like even if you look at my charts, like I don't do that much TA. Like I usually like to just keep my charts like really clean. Like the couple of things I'll do is like I'll draw like the obvious levels right here, which means like hey, once Tesla breaks above 367, like it's gonna go crazy. Or I'll draw like I'll draw gap fills right here, and I'll say okay, if Tesla hits 306, like there's a high likelihood of it bouncing. And also like I'll look at the resistance to support flips, where I say okay, since it broke out 291, if price ever came down here, like I would probably buy this dip in anticipation that the bulls that broke it out above want to hold that level, and they're gonna send it back up like this. Like this is literally my TA. Like I draw horizontal lines, and that's really all I need. Yeah, I use like fibs here and there as well, but it's less important. Like I think being able to spot and identify the key areas of liquidity are very important. Like for example, this was the Tesla long that I took, like the long swing on April 7th. And if you look at why I took that, I mainly took it because I was looking at this pivot low to sweep, and then you get in right on this candle right here. Got it on there, ate this massive pump candle. Like it obviously came back, but like it never dropped back below this level because the buyers took up enough liquidity and then they just ran it up afterwards. So yeah, support and liquidity and resistance with liquidity, like that's literally my bread and butter for price action. Everything else is Heatseeker and just using my algo. Alrighty. AI Master, just go ahead and ping me on my X account. Like if you don't have access to the free Discord, like I will go ahead and send you a link to it, and then you can try it out tomorrow to see if you like it. But um, yeah, just watch all of my recordings and just go through Like I would actually go through it multiple times, and you'll be happy that you did. What was my strategy and success rate before Heatseeker? That's a good question. Like before using Heatseeker, like I mainly only used like price action and used my algo. Like this algo that I built, the one with the dots, is like insanely good. Like even if I didn't have Heatseeker, like with this alone, like I could probably make decent money because it is great at catching reversals. Like it caught a short here, caught a short here. Like this one was a little bit of an early print, but like if you held long enough, like you caught a short, it caught the lows here. Like it's pretty solid. Even on NQ, like it caught the longs here, like small short, long, short, short, like long right here. Like these are incredible success rates. They caught the short here, like you make money. So even without the heat seeker, like I still did decent and I was a pretty good swing trader. But once I layered it on, like, I would probably say before it was like 70 to 75%. I'd say now it's easily like 80 to 85% in terms of overall success rate. Like I just have a lot more confidence because like it literally gives you the answer. Like it tells you where the dealers want price to end up. Are there any data shifts that tell you that you consider the earliest tell of a trap? Um, Generally not. Like the good thing about Heatseeker is that it's really honest. Like there's not that many traps because traps are generally laid out on like retail stuff. Like retail patterns are there to literally trap people. Like, like the stuff that people do, like drawing like the rising wedges and drawing the like all these done retail patterns, like those are there to trap you now because the market makers they know. Like they know people are catching on to these patterns, so it's like, it's gonna go up and people see it drop down and they're like, oh shit, like we're gonna dump. But what actually happens is that it actually fucking pumps right after and then you get destroyed. So traps are in retail patterns in retail trading. Like, the tools that we use are meant to track like dealers and institutional flows. So there's not as many traps. SPX did a textbook W bottom. I don't think I argued against that. Like a W bottom is good. Like, okay, all right. So talking about retail patterns, like the only retail patterns I really like are double bottoms and double tops. Like that's literally all I use. Like I don't care about rising wedges. I don't care about like bull flags and bear flags. Like those have very very high failure rates. You can even count them, but like I think a bull flag is literally like a 45% or 50% success rate. Like that's not good, and I would not want to trade that. But double bottoms and double tops, in terms of like probability, those have a 66% chance of trading or playing out. So those are patterns that I'm interested in using. How often are you looking at the next 15-second map? Today I was looking at maybe every 3 to 5 minutes. I'm looking at it live. I mean, the reason I have it piping to my Discord is like even if I'm out and about, like I always have it handy with me. Even if I'm sitting on the toilet, like I'm able to see it. Like it's just great to be able to have it handy in your pocket. So for me, especially and particularly because I'm a day trader, like I always want to know how dealers are repositioning, and like you have to train your eye to like see map after map and understand where the rate of changes are happening. And that helps you understand like, okay, like dealers were initially positioned to hit this price target, but it looks like they want to move the target to this node instead. So like they're moving targets. Like, even today it was, 5880, then it was 5865, then it rolled up to 58 or 5900, then 5900 to 5925, then 5935, right? Like it wasn't predetermined at the beginning of the day. Like it's just something that keeps on moving. The cool thing is though, is that it moves before price does. So like you can actually predict and catch these moves before they happen. Like that's the most important part. All right, any other questions? What's the next map after Tesla? I'm probably gonna do a MicroStrategy. Like I think MicroStrategy is like a very, very manipulated ticker in terms of how dealers are positioned. Because that one lately, even though Bitcoin pumps, like MicroStrategy has just been shit in the bed. So one thing I know is that it's a very, very heavily flooded ticker by retail. So the market dealers go crazy over that one. Like they literally want to rape everybody's pockets and just like take their money. So those are the ones that I care about, which is why I developed it for Tesla. And next will probably be MicroStrategy and then maybe Coinbase. Like I want to build heat maps for the most manipulated tickers because if you could read through the manipulation, then that's fucking money. Like you're making money. Like you can't really help the fact that the market is manipulated, right? But there's no better advantage and benefit than understanding how it's manipulated. Like once you understand that part of the game, like everything just makes sense. It becomes so easy to trade afterwards. Like the reason why most people suck is because they follow the herd. Like they follow these gurus on, X and they go to all these paid discords and they're like, "Yeah, I'm going to go ahead and follow what this person's doing because, they have like, you know, they've got these massive gains." But I mean, quite honestly, like you're not going to be profitable doing that. Like I can guarantee you that. Like that's why I made the Heatseeker. Like the reason I made the Heatseeker is like I want everybody to learn how to trade on their own. Like I would rather provide a tool for people to use to become an independent trader that can make decisions on their own than have people depend on and rely on my alerts. Because if you rely on my alerts, you can never become a better trader than me. Whereas if I codify the tools that I use and provide them to people to combine with their existing strategies, there's at least a non-0% chance that you could become a better trader than me. And as somebody who like teaches how to trade, like there's nothing that would make me happier than building and developing traders that eventually surpass me and do better than me. Like that's like if I see things like that happening, like that's what makes me happy. Like genuinely. But yeah, up until now, I don't think I've run across people in the free Discord that are that great. There's a couple of them, but I'd say like in terms of level, like we're pretty equal. We just have like different perspectives on how we trade, which is fine. Like I respect everybody's, strategy and their viewpoints, and there's a lot to learn from it. But yeah, everybody else in the server, like they just need to put in more time. Like I think a lot of people are desperate and they want to be profitable, but they underestimate how much time, energy, effort, and sacrifice is required, and they just shit the bed. Alrighty. If I don't get any more questions in the next 10 seconds, I am gonna go hit the hay. Yep, no problem, yo. Yep, see you guys tomorrow. We're gonna wake up early and make some money. All right, later. Don't sleep on hay.